This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. On the Markets Club podcast with Brian Hoops from Midwest Solution for today. The weather was pretty bad for the spring in Missouri and southern Illinois, but it's pretty dry in the Midwest. We were talking about it with Brian Hoops from Midwest Solution. We are talking about the fundamentals and technicals on the grains markets for today with Clayton Pope from Pope Commodities. This has been the podcast. The weather was pretty bad for the spring in Missouri and southern Illinois, but it's pretty dry in the Midwest. We were talking about it with Brian Hoops from Midwest Solution. Hey, Brian, how are you? I'm
Hey,
good to
Caesar,
have
I'm
you
good.
on
It's
again.
okay. It's great to talk with you.
Eh,
Brian, let's discuss about the weather in Missouri. We know that it was pretty wet in the spring. How is the crop condition in Missouri and southern Illinois?
Yeah, you mentioned it was wet in the spring. In fact, it was record rainfall amounts here in Springfield in the month of May. So we were very wet, and it really didn't hurt anything as far as crops or yields or anything. It was wet enough in the spring that the winter wheat crop absorbed all of it and then dried out for harvest. So the crop did amazingly well. We had huge yields across Missouri of the winter wheat. Um, we had a lot of moisture carried over from that crop to double crop the soybeans, so they got off to a pretty good start. It really helped out the corn crop after it was planted to get all that rain during the month of May. So really no complaints at all. But as we got into July, it started to get pretty dry. And during the month of August, it was a record dryness. We went from record wet conditions in May to record dry conditions in August without any rain whatsoever. And that took some of the top end of the yields off of corn and certainly the soybeans, as they did not have enough moisture to really fully finish. There was, some moisture left over from the wet spring, but really without any rainfall during July and none at all in August. It was a poor end to the growing season. Now we're getting set to see winter wheat being seeded, and we've had a couple rain showers, nothing like Kansas and Oklahoma have. Now they've had really good rains to help out their winter wheat crop and get the seed bed prepared for their planting. We haven't had that much rain. We expect to get a little bit more as we go into more of our rainy season, and that should help us out. But right now, producers just kind of focused on harvesting corn and beans, and if it rains, they'll start getting in the fields and seeding the winter wheat crop when they have a little bit more moisture.
How is the beans crop for right now? We know that they don't like to have wet feet.
You're right. They don't like to have the wet feet. They didn't have to worry about that here this summer. They got a little wet during the early springtime, but if they were planted in April or May, probably a little bit too wet for some of the conditions. The double crop soybeans, they never had to worry about that. They had just too much dryness to contend with. So I think yields will be down compared to a year ago levels. You need that rain throughout the summer to finish that crop off when it's developing its seed and its pod and filling out that pod. And we've never had that this year. So I imagine yields are going to be down when it's all said and done from the USDA.
Yeah, it's gonna be very warm.
um,
What was your thoughts on the world supply and demand report from last week? Do you have any concerns about these prices in the corn markets?
So last week's reports I thought were pretty interesting from the standpoint USDA continues to find acres that were seeded of both corn and now soybeans. And so you go back to the 30s, 1936 since we've planted as much corn in the United States as what we did this year. We thought we'd have a lot of acres being planted. Now the USDA says it's over 98 million. They've added almost 3 million acres since the March planting intentions report into the June report, and then in July and August they've added 3 million acres since that time frame. So we've picked up a lot of corn acres, but yet the corn market really hasn't fallen out of bed. In fact, the technicals have improved. I don't know that there's too many analysts or even farmers that believed the USDA when they said we were going to harvest 188.8 bushels per acre. That seemed like an outstanding number, one that was too good to be true just because of dryness in the Western Corn Belt during August, but also because it was so wet and the Illinois crop got off to such a poor start through the growing season because, as you mentioned earlier, it was so wet. So yeah, I was optimistic that we would see yields come down from the USDA for both corn and soybeans. I think the technical trends have turned to the plus side for both corn and beans, and given that, the funds are not likely to be sellers. They are more likely probably to be buyers going forward here. So pullbacks will come as we get some harvests going on and weigh on the prices. But as we saw days like today, the path of least resistance is probably going to be to the upside instead of the downside in corn and in soybeans.
Do you think that the Department of Agriculture on the corn yield is higher than expected?
Yeah, I do think they're way too high on corn yields. That 188 they dropped to I think 186.8 this last week. I think that's probably still a little bit too high. Um, I think we're going to have yields come down even a little bit further because of dryness during August, and they didn't change the soybean yield much. They dropped it from 53.6 to 53.5. I think they're probably going to have to bring soybean yields down slightly as well. We haven't really seen much in the way of news of the last 2 months in the wheat market. The news that we did see last week was bearish for wheat prices from the standpoint they increased world production numbers and they increased world ending stocks more than expected. There's going to be big crops grown in countries like the Ukraine and Russia, Australia, Argentina. They're increasing their crop sizes this year. It's going to be very, very hard for
Um,
the U.S. to compete with these other countries, and it means that producers that are seeding the crop this fall, they really don't have much incentive to put a lot of fertilizers down. They may plant some crops. They don't have a lot of reason to plant more acres. I think we see less winter wheat acres this year, and a lot of it goes unfertilized until we get to the spring and see how it looks when we break dormancy and see what price action is doing at that time.
Who are the technical aspects on the wheat markets, Brian?
From a technical standpoint on wheat, I think we're in a bearish situation. Um, the corn, I think technicals have improved. Soybean technicals have improved, and we are, trading in small sideways to uptrending type markets. But when I look at Chicago or Kansas City wheat, uh, we're not real close to breaking our downtrends. We'd have to rally another 8 to 10 cents to do that. We're starting to rally into resistance this week, overcoming some of that bearish news. And that's a sign that maybe we can put in some sort of a bottom and break that downtrend is when you have that bearish news and yet you can close higher or close stronger. We did that to a small extent after the report day. We've had another update today, yesterday. So we've had, 3 or 4 days in a row of higher prices. Now we start to run into some resistance and where the trend may change. That gets a little bit harder. But if we can do that, then we could see wheat find some more short covering and have some sort of a rally without a lot of real fundamental support. other than the lower US dollar index.
We should have a conversation about this livestock markets on today's exchange. What is your thoughts on the cattle markets?
Well, you've kind of been talking about a bottom forming in corn and soybeans and maybe one forming in the wheat market. We can't say that about cattle. I think the cattle have actually peaked for the spring or for the summer and late fall and will start to trend lower. We thought after we get past the Labor Day timeframe, we would start to see a top in the box beef markets. And once that box beef market has peaked, prices would move lower, cash trade would be a little bit softer. Now I think that's exactly what we're seeing here is box beef values turning lower after Labor Day. As we go through the rest of September, they probably will trade lower, and it has put a top in our futures market. I think it also will put a top in the cash market. So um, most likely those markets start to slowly work lower September into October. I don't think we really fall out of bed because we have very tight supplies. We have a cattle on feed coming out this Friday, and its expectations are fairly friendly. On feed supply is about 99% of a year ago, placements 91% of last year, and markings at 87. So we're still not placing cattle. There are no cattle to be placed into our feedlots. This is going to keep us very well supported. However, as far as the best prices of the year, I think we've seen them in late August for both the cash markets and the futures. We could trend lower from here, but not fall completely out of bed.
The cattle markets is back down from a past performer. However, what is your thoughts on the beef demand after the Labor Day?
Yeah, it's always get hard to get a real handle on demand, but we're pretty confident that the last grilling holiday of the season is the Labor Day holiday. And once we get past that Labor Day holiday, we start to turn things lower. And I think that's the stage that we're in is demand has softened up. The cutout values are going to continue to fall unless packers start to cut their kills, which means they need less cattle to meet their kills every week, less demand for that cattle. Box beef continues to work its way lower from these high levels because demand isn't as strong at these higher levels. It'll find a price level at lower prices to find out where that demand resurfaces once again. So I'm looking for prices to move lower here.
Do you have any concerns about the consumer budget?
We definitely do. Consumers here have probably done better, more far and away better than what we have expected as far as staying power in this market. It seems like they had cut back on a lot of things this year, but higher end steaks, those are still in very strong demand. They did seem to cut back on some beef demand, but there's still families that are still consuming beef, um, as well as mixing in pork and turkey. But I think, for demand going forward here, we're going to see a little bit softer prices as we go into the fall months and get away from less grilling, get out of that grilling season of hamburgers and that sort of thing, and maybe move into some more pork items as far as their protein diet as we go into the fall.
Do you have any final thoughts on the harvest season in Central
Yeah,
U.S.?
it's really just getting going in the harvest time frame. So we're going to see a lot of producers in the fields. A lot of have opened up fields. Some are still waiting for it to dry down a little bit more. They've had some rain that have slowed down the beginning stages of harvest, but the next 3 to 4 weeks, we should see most harvest being done. I think the basis levels will widen out during that time frame. Initially, we're seeing very wide basis already. It may get a little bit worse, but I think prices do start to improve from a basis standpoint after we get past mid-October and get the bulk of that harvest behind us. We'll start to see basis levels slowly improve and tighten up as we go through the winter months.
Thanks, Brian. Good
Absolutely
to
great to
visit
talk
with
with you.
you. We are talking about the fundamentals and technicals on the grains markets for today with Clayton Pope from Pope Commodities. Clayton, how are you? And glad to have you on once again.
Well, thank you, Caesar. It's good to be back.
Clayton, let's start with our conversation with these prices for corn. How concerned about the corn markets?
Well, of course, the big question right now is yield. I think in the case of corn, it's the absolute biggest item of uncertainty, whereas beans, I would say the biggest item would, of course, be China's participation in our export market. But as far as corn goes, I'll tell you, these yield guesses are all over the place. There seems to be a pretty strong underlying expectation that USDA will cut yields again in October. And I would probably lean towards that way too a little bit. I don't think you do have some pretty dramatic calls for sharply lower yields being discovered out there. We're not thinking it's going to be anything dramatic, but with USDA coming down to, I guess they dropped 2.1, they're now at 186.7. I mean, it's not hard to imagine them dropping another three, maybe, get down to, 183 and a half, something like that. If that did happen, it'd be supportive for corn, but it wouldn't touch off a lot of fireworks until maybe after harvest. I think would have an upward bias at that point, but it's just going to take a long time. I mean, frankly, even the October number is still going to be a work in progress, but I do think that they're very likely to cut yields somewhat. But on another note, the
What
demand
is the cash grains markets for right now in central Illinois, Clayton?
um, well, of course, basis is dropping as is seasonally the rule. Hearing some pretty big drops. I don't think there's any question we're going to have some big ground piles out there throughout the country. Probably less in Illinois than anywhere else, though. Actually, it's one of those really bizarre years where Illinois is kind of bringing in the tail end of the whole corn crop, and it's usually the opposite. It's really unusual for Illinois' yields to be subpar and everybody else is above average. But that certainly appears to be the case. So those ground piles might not be there, or certainly as extreme in parts of Illinois as they are likely to be other places. But the other thing on corn I wanted to mention is the demand side. Well, USDA was really aggressive in that September report. They raised usage, I think, by 525 million bushels, if I remember. They raised another 100 million in the exports on this report. So, all of a sudden they've added over 600 million bushels of usage. This is right after Brazil had an absolute record crop. They'll probably plant huge acreage again, this year. There's a lot of competition out there. And I think the USDA kind of had their rose-colored glasses on for some of those usage bumps that they're giving us. So again, that kind of even if you do get a yield decline, which is likely to some extent, I think over time we'll find out that the demand numbers are a little high too. So we're not looking for a real dramatic bottom line change in the carryover, but I guess all things considered, we would expect it to come down somewhat from the current number, which is what, 2.110.
Yeah, it's pretty tricky to see what yield trends.
Well, it is, and you've got a lot of respected firms out there that are all coming in not too far off from USDA. I mean, we'll go through the list of names, but a lot of them have fairly big cash grain footprint out there and have a pretty darn good track record in terms of predicting these corn yields. And it's kind of hard to argue or really expect huge shocks when most outfits are within about a 3 bushel per acre range. Again, you've got some outliers out there thinking you could slash this yield by, holy cow, I've heard some people insisting it's going to drop by, 7 to 10 bushels per acre. I'll believe that when I see it.
Some people are concerned about it or not agree with it.
Well, I think most people in the industry, at least that are dealing with growers, are hoping that it does get shockingly low.
No.
Their farm economy could use all the help it can get right now, and people would love to see a print of 180 or below. But
Mm-mm.
um, of course, there's two sides to that coin. The users certainly don't want to see that. I think certainly the cattle producers could afford it a little bit, I think, given these cattle prices. But anyway, as far as corn goes, I don't know. Hope springs eternal. I do think that all this talk and expectation of a lower cut in yield probably will prompt um, less change of ownership in harvest than you would normally see. I think a lot of people that would be tempted to just cash out and take their hit right now, uh, that don't have on-farm storage and are forced to use commercial storage. I think an awful lot of those growers will sell what they have to for cash needs, but on the other hand, probably more will be stored than is normally the case, simply because there's a lot of optimism that prices will increase down the road.
Sure. Do you heard any harvest activity in central Illinois?
Oh, I sure do. We hear a lot. I actually drove down to Decatur yesterday. I'm in Champaign, and I don't mean Decatur. I mean Mattoon. Was down in Mattoon and came back, and boy, those fields were busy. Combines rolling everywhere, and I've heard the same thing. Going all the way down to Tennessee and south of there. But as far as Illinois goes, again, all over the place in close geographic locations. I mean, we've got some people here in the county that are talking 40, 50 bushels an acre lower than last year. But you go 20 miles away from them and people are rivaling last year. I will say this though, for USDA expecting, record yields by a long shot, we're not seeing very much talk of that from any of our customers. I mean, certainly some in Iowa are looking at record yields, out in Nebraska, Dakotas, Minnesota, they're all looking fantastic. Parts of Indiana are looking great. Um, but as far as Illinois itself goes, there's not a whole lot of people pounding their chest over any kind of record yield expectation. And really, you go down to Kentucky or Tennessee, kind of the same thing. It's pretty rough in a lot of those areas. Indiana, like I said, is pretty spotty. Ohio, of course, has been hit pretty hard, it sounds like. Certainly the problems that are out there are focused on the eastern belt, would say, but that western belt's still looking pretty fantastic. So it's really a question of can those areas that are in fact looking at record yields, can they keep that average national yield up in record territory? And when all is said and done, we would guess it will, although not by as much as it appears right now.
What is the weather forecast for next few weeks ahead in Decatur to Danville, Clayton?
It's looking pretty darn nice. I have to think that we're going to see, harvest activity just go unabated here for a while. We do have some rain coming in late this weekend, like Sunday, Monday. It sounds like chances are increasing, but I'll tell you that and that crop condition report, what was the corn harvest? I think 14% or something like that. I mean, I bet this next Monday we're going to see a number. Oh, I wouldn't be surprised if it's in the 40s. So, so people have to sit back and wait a while with some rain finally coming in starting Sunday. Yeah, that'll probably put some delays again. But I think, for the next 5, 6 days here, we're likely to see, real hot and heavy activity. But then people, I would guess, in that area you're talking about will be sidelined for, actually, those extended forecasts are looking pretty wet. I mean, it could go on for a week or so.
Yeah, it will be very warm as well. However, we need some rain.
Well, we do. Heck, it won't be long. People start talking about the dry subsoil and how it's paving the way for problems in 2026. I mean, it is a futures market. You look back way back in '88. I'm not even going to say this, but I mean, the real serious drought problems in this U.S. tend to have a real early start. So, I think this rain will really be very welcome for people as long as it doesn't screw up harvest too much, which I don't think that's the expectation by any means. But you're right, we certainly could use some rain, although I don't think rains at this point are going to affect yields at all.
Of course.
I think you're asking about the cash bean market. Well, I mean, basis is horrible, no doubt about that, and likely to get worse. Um, Maybe not so bad in Illinois just because, yields are going to be a little lower. But again, if a person has on-farm storage, it's kind of worth its weight in gold this year with these spreads as wide as they are. And I would avoid at all costs selling any beans in the spot market if I had the storage.
How about the management of the cash grains markets as well?
Well, that's what I'm talking about. As far as the cash grain markets, I mean, as is usually the case, the worst time to price your cash is at harvest. Some people are held captive to that, I guess, that have zero storage and haven't made any forward sales or locked in the basis at better levels that existed prior to this. But like I said, if you've got the on-farm storage, I think you want to avoid cash sales right now at all costs. If you do have cash needs and you don't have the storage and you got to get rid of some, well, what can you do? I mean, you just got to hit the bid here and get it sold. But I mean, like I said, cash needs kind of puts you in a corner a little bit.
Sure. Thanks, Clayton. I am
Okay.
glad to have you on again.
Okay, Caesar, my pleasure. Nice talking to you. You take care.
This is Clayton Pope from Pope Commodities on Back Roads of Illinois.